Let's go ahead and get started with this month's Doctor is In. Well, they always said, may you live in interesting times. And Ryan and Anna, this is one of those days. So I'm looking at the S&P up about 68 basis points or so, and Dow Jones down about 75 basis points. But I don't want to focus on those. I want to focus on macro in the healthcare space. So, man, there's too much to go over: tariffs, Medicaid, changes to FDA, NIH, all this sort of thing, like a mosquito at the nudist colony. Where to begin? So Ryan, where do we begin? How do we start thinking and talking about this?
Or I could spend well over our 15 minutes of a lot of time here talking, I think, about one of these. So I'm gonna do like a lightning round and try to move
Do
through
it.
it quick and just orient people, and then we're gonna pivot to Anna, who is gonna share with us that there is, despite all the change, there's still good stuff happening in healthcare. So we're gonna get into some specific stocks and highlight those. You got to begin with tariffs. It's on everyone's mind. It's impacting every sector, not just healthcare. And I'd say the good thing about tariffs, at least in healthcare, is that we kind of know the framework a little bit now. And so the Liberation Day tariffs were put out. They were big numbers. They've been walked back. That could certainly still change, but it feels like we have a range, and we can start to apply that range to a lot of the companies in our space. I think Abbott is a great example. Ticker ABT reported earlier this week, medical device company, big company, and they came out and said, look, we were actually going to raise guidance for the full year if it were not for tariffs, but we can absorb the tariff impact. We can move our manufacturing around. The weaker US dollar is actually helping us when it comes to results. And so we're going to hold our earnings for the year. Now, not everyone is going to be able to do this and have this flexibility, but there's opportunities for these companies to shift things around, maybe take some price, to mitigate the impact of tariffs. And so now that we have a framework, we can begin to apply that framework to the companies in our industry and try to figure out who will be disproportionately impacted negatively and who can wade through this and come out pretty clean on the other side. Of course, balance sheets are going to be critically important to this process here. The one big thing we're waiting on in tariff land still is pharmaceutical tariffs. So the administration has been quite clear that these are still coming. They launched a 232 investigation here earlier this week, probably coming in the next couple of months. And so we need to see the magnitude of those. How big are those going to be? Of course, large pharma is pushing back. They've announced a number of new facilities to be built over the next 4 years in the US, obviously to try to mitigate the impact or what the impact may be from tariffs. So there's things happening here. Really, the best news for pharma is that they have really high gross margins. Biotech and pharma, when you get a drug on the market, your gross margins may be 90+%. And so if you think about a 25% tariff rolling through on the raw materials that you get from, pick a country outside of the US, it's manageable. You're much better off having a 90% gross margin and absorbing a 25% tariff than you are being an industrial company who has a 30% gross margin, and now you have to absorb that. So they're still in a good position, but we got to wait and see what these numbers are. Tons of changes at the NIH, tons of changes at the FDA, even announced today, more cuts coming. I kind of want to highlight some of maybe the positive things that are coming out of some of
Please.
these changes. And one's at the FDA. We think it's pretty interesting. They announced formally a plan to transition away from animal models in early stage drug development to using more AI. This will take time. It's not going to be overnight. But what this ultimately means is that drug development in early stage identification and testing before we get into humans is going to be quicker and it's going to be cheaper. And this is good for biotech and it's good for pharma longer term. Again, not an overnight thing, but in the near term, pretty good. The other positive thing I'd highlight is President Trump. I think it was yesterday, the days blend together a bit, but I think it was yesterday, put out an executive order that was sort of directing his desires to Congress. And what was not included in that executive order, this was around pharma, but what was not included in that executive order is any mention of most favored nation drug pricing. And so you may remember in his first term, this was a topic that came up quite often. We're not going to pay anything more than Canada pays or the UK pays or France pays. And notably, this was not in there this time. And actually, the rhetoric has been quite the opposite, that these countries are not paying enough. So it does appear that the administration, at least for now, has shifted that stance to being the other countries need to pay more, not that we necessarily need to pay less. Although that still is in there in a couple different varieties. So I would say there's puts and takes in healthcare land here, but there's some good stuff. There's some good stuff going on. And maybe if you want, Jonathan, it's April 17th. There's some news on UNH. There's some news on Eli Lilly. I can run through that real quick too, as well, if you'd like.
Yeah, let's do that. I mean, everybody has Bloomberg or CNBC open, and UNH United Healthcare is right there at the front. So, and so is Eli Lilly. So stocks making moves both directions. Give us a couple of points about what we saw.
Yeah, so we'll start with Eli Lilly. We'll get that one out of the way. So long awaited oral GLP-1 data in diabetes, and expectation was 5 to 7% weight loss with a pretty clean safety profile. The weight loss came in at the high end of the range. The safety profile was on par with other assets we've seen. It was very clean. It was very good. The street, what I would say, was bracing for a good result, but a little bit of messiness in certain places, and we didn't see that at all. It was quite clean. You see the stock reacting quite positively to that. Lilly continues to be and remain in the pole position in the weight loss, obesity, GLP-1 category, and this is going to help them maintain that position. So good news for Lilly. Bad news for UNH. This was, I think, heading into the earnings report, had become a consensus long for much of the investment community. The stock had been under a significant amount of pressure last year for a number of different factors. We've talked about that in these calls in the past. But there was some opportunity there. People got really excited when 2 weeks ago now, CMS released proposed Medicare Advantage rates for 2026. They were significantly higher than people expected. This was not a political issue. They were higher than people expected because UNH has had to absorb, and other insurers have had to absorb, higher patient costs, greater patient utilization of care over the past couple of years. And that's now beginning in a formulaic manner to run through the rates. And so this was anticipated, I think, by some of us out here who follow healthcare. And it was great. And the stock really rallied on that. What was unexpected is UNH is continuing to see higher patient utilization in the first quarter of 25. And investors had really thought that A, they had set a conservative guide for the year, and B, that costs were beginning to flatline, not decelerate, but at least flatten from a pretty steep acceleration we saw in 2024. It appears that's not the case. And so that has really thrown investors for a loop this morning. And you see the stock reacting, probably a little hate selling this morning, I would guess, but not a good result for UNH this morning.
No, it isn't, but things happen. Let's kick it over to Anna. Anna, you've got a couple of things that we wanted to talk about today. RYTM is one, and then some other biotech notes that we got on development. So why don't you give us some positive data that we can focus on here?
Yeah, there's been a lot of pressure in the class for sure. So we want to highlight some stocks that have been doing well, spots of green in the sea of red. And one of these is Rhythm Pharmaceuticals. And this is one that is really interesting because, yes, it's in obesity. And I know we have so much obesity news, but this is different, I promise. So this is in a type of obesity that actually doesn't respond to GLP-1s. And so it's called hypothalamic obesity. And the picture on the right actually shows you the hypothalamus. So in relationship to a whole brain, it's teeny tiny. And essentially, when a person has cancer, sometimes, depending what region of their brain it affects, they get surgery to remove the tumor, and the doctor can't help but nick part of this part of the brain. And when they do that, they actually interrupt its natural function in controlling energy homeostasis, which basically means the balance of caloric intake versus energy expenditure in the body, which is a big contributor to obesity, right? When you take in more calories than you burn, you gain weight. And so these patients who never previously had obesity, within 6 to 12 months of their surgery, are finding that they cannot lose weight. Dieting doesn't help. They're hungry all the time. And it's like something that they've never encountered before. So really kind of a startling condition with very fast onset. And like I mentioned, GLP-1s don't work simply because without this part of the brain, the GLP-1s actually can't signal correctly, which is really interesting scientifically. And so this company is trying to address the need in patients who have types of obesity that don't respond to GLP-1s. And there was some skepticism. Obesity trials are always kind of messy. As Ryan mentioned, there can be side effects, GI-related side effects, higher than expected discontinuation. But again, this study really surprised the upside, showing 19.8% placebo-adjusted weight loss in these patients, where anything above 10 would have been good, anything above 15 would have been great. And so this was really a stellar result, and it was consistent across adults and children, which also was a question whether adults would respond in the same way as the children. So overall, very positive. And for this company specifically, they were already approved in a teeny tiny indication of genetic obesities, which is a couple thousand patients in the US. But this is an opportunity for them to expand to a much larger population. So really interesting, potential approval next year. Fingers crossed for Rhythm. And then leaving behind obesity, I do just want to jump into we always talk about, we cover all market caps, and this is a really good way to highlight why that's useful and why we can invest across the space. So here we have data from a large cap, Bristol Myers Squibb, ticker BMY, whose data was not successful. And that was actually a negative read-through to one small biotech and a positive read-through to another listed here. And I think that this is so interesting because it's a heart condition that a lot of people are affected by, but there aren't many approved therapies. And so actually Bristol has the only approved therapy for hypertrophic cardiomyopathy, which is essentially a thickening of the muscle of the heart, which prevents it from contracting. And it doesn't take in enough blood, it doesn't push out enough blood. And so you can imagine if a patient has this condition, they're dizzy, they're tired, they're out of breath, they might have heart palpitations, they might be predisposed to atrial fibrillation. So it's a very serious condition. And there are two subtypes, one where the blood flow is actually obstructed in the heart and one where it's not. And essentially obstructive is much more easy to identify. You could imagine, you're blocking blood flow, it's very severe. Whereas non-obstructive often goes underdiagnosed because it can be asymptomatic. And so while it's already approved in obstructive, and it has been for several years, it is not yet approved in non-obstructive, and this was a phase 3 trial assessing it in that indication, and it was unsuccessful. Now, Cytokinetics, CYTK's drug, is the same mechanism. And so that stock responded negatively because with the same mechanism, you might think it's not going to look any different, it won't be successful. And the other competitor in the space that I mentioned is Edgewise Therapeutics, EWTX. And while this company, they're slightly earlier in development than Cytokinetics, and because of that, they haven't actually revealed their exact mechanism. It's highly secretive, but they tell us that it's not the same as aficamten, which is Cytokinetics' drug, and Bristol Myers' mechanism, which is really interesting. But it also works on sort of the contractility profile of the heart. And essentially, this is positive for Edgewise, maybe, because since it's not the same mechanism, if these two other drugs, which are Edgewise's primary competitors, are unsuccessful in this indication, that sort of opens the door wide open for them. And Edgewise has previously published preclinical data in a pig model, and pig hearts are, eerily similar to human hearts. And so here on the right, I've shown photos from Edgewise's data, which you can find on their website if you're interested, showing essentially a pig heart that's treated or not treated with the drug. And so on the top piece, you can see my pointer. You have pigs who are not treated. And on the bottom, you have pigs who are treated. And the lighter colors indicate more open space, which means less obstruction. And so if you go from this pig up here to down here after treatment, you can see more white space here, more white space up here at the atrium, which indicates that actually the muscle is able to sort of decontract and allow blood to enter. And then same thing in the pig on the right. You see really dense muscle tissue here at the base of the heart. And in the second scan after treatment, it's much lighter, so much more blood flow. And that's in a pig model of NHCM, so the one where the Camzyos has now failed. So potentially positive. Just an interesting play from looking at large cap data all the way down to small cap. And that's what I've got for you today. Yeah.
Yeah, how long before Edgewise gets some more data to share and more public information about what they're doing?
Yeah, so they've actually already presented data in humans with both obstructive and non-obstructive HCM, which has been really interesting, but it's in very few. We're talking like 3 patients, 5 patients, teeny tiny numbers. It looks promising, but it's not conclusive yet. We will get more data at the end of this year in essentially longer follow-up in those patients who have now started dosing on Edgewise's drug for 12 weeks instead of what we have right now, which is only 4 weeks, which is a very short time period. If you think about the changes in muscle structure and heart composition and function, that takes a little bit more time to sort of filter through. So that data in the second half will be very interesting for Edgewise.
Awesome. Fantastic. Well, Ryan, I have another question for you that just came to mind. For a lot of these managed care business, we talk about repricing, and surely United Healthcare is going to respond to today's news. So help us think, just help us think through what their reaction is going to be, because my assumption is they're freaking out and are a little surprised by the stock market's reaction too. So surely they're going to engage in repricing, timelines, how they're going to address that. Any comments you can make there?
Yeah, I'm glad you asked, because I feel like I ended on a sour note and sort of told UNH investors to pick up their ball and go home.
No.
So you're right. Over the history of my career, these large managed care players, when they have cost issues, when they have patient utilization overruns versus their expectations, they do go back and reprice it. And over time, that does trickle through the business. And so what is UNH going to do now? The good news is they will submit bids for 2026 here in the middle of the year, and those will go to CMS. And this issue is isolated, per their earnings call this morning, to particular areas in the MA Medicare Advantage business. So it's not in Medicaid, it's not in commercial, it's not widespread here, it's isolated. And so they can take the higher cost trends into account when they plan the care packages essentially for 2026. And so they have an opportunity to fix this. They also have patients that they've picked up that are new to UNH in 2025 that were on other plans that exited markets in 2024. And so, as you can maybe imagine, if you're a plan exiting in a market, maybe you weren't really on top of your members as much, trying to make sure they see the primary care doctor, for instance. And so now that you're in a new plan, you're scored at a certain rate, UNH gets paid a certain amount. Well, as it turns out, some of these patients had higher acuity, needed to see the doctor more than UNH is getting reimbursed for. And so that will naturally flow through the model. So if we think about today, the earnings adjustment, I think it was about $3.50 at the midpoint, $3.50 down. We'll see what happens. There's a lot to wade through here. It's day one of just getting the news. I think it's pretty reasonable to expect over the near term they can get about 2/3 of this back through repricing and fixing their book of business. And it's not a guarantee, of course, but I would say that's more of the low-hanging fruit component of the issues. Whereas the other third of the decrease, the other third of the 350, is possible, but maybe a little bit of a harder lift. The good news is they have the opportunity to do this. They're going to reprice that book of business. You still have higher rate in 26, potentially higher rate in 27. And so I think they're going to be okay. It's a frustrating day to be a UNH shareholder without a doubt. But the good news about large managed care, the good news about large cap in general is these businesses typically, when they have a slip up like this, they're not broken. The thesis isn't dead, and they have opportunities to bounce back. And I'll highlight again, very little to no tariff exposure. That may save the day here in the course of 2025 when we think about the broader market and the impact here. So,
well, it's kind of interesting too. I mean, 6 days ago, we're at $600 price. Today it's at a 448, 450, which is almost a 3-year low. I mean, you have to go back 5 years to be at this price level. I know that's a pretty crazy move for one day. I'm assuming there's a bunch of people that are buying the stock right now.
And there's definitely some frustration. So we'll can't be reactionary.
No way.
Gotta look at the facts as they present themselves, and that's what we're doing. That's what UNH investors are doing. So to those holders out there today, have some patience.
Yeah, well, this is a great call. Thank you guys so much for going through big picture stuff all the way down to little EWTX and CYTK. We covered a lot of ground, which is exactly what we want to do. And we'll talk to you guys again next month. Thanks so much for your time.